So once basically the LLC is purchased, it's on the trust tax return and it never pays any taxes. It's tax deferred. So what we did is we essentially treat the sale of the crypto as a business sale. So we essentially set up an LLC. It's a single member LLC, taxes as sole proprietorship. It has its own EIN number. And essentially we get that LLC business set up on a central exchange. Then we set up a wallet under the central exchange under that LLC. So basically when the trust buys an asset, like a piece of real estate, they're basically getting the money out of crypto. But when the trust basically buys a business, they're actually buying the business and all the assets in the business, in this case, which also includes the crypto. Then we basically bring the crypto owner on as a manager to the LLC. And this is done quite often when one business is buying another business. You want to keep somebody on for a while for transition purposes. Well, that manager role is the person who has the keys to the crypto, and that's the original crypto owner who wanted to sell it. So once basically the LLC is purchased, it's on the trust tax return and it never pays any taxes. It's tax deferred. So it never pays taxes that you don't want to pay, put it that way. So if you sold something before the LLC was purchased, that's on your tax return. Once the LLC is purchased, it's now on the trust tax return. So then we just basically DCA out. So you'd want to basically buy this trust sometime when it's getting close to starting the bull market. You would then DCA out the way you would anyway. And it's just that the stable coins would get collected and moved into a trust instead of you paying tax on them and trying to convert them on your dollars into dollars on your own.